So this is weekly commentary 43. So let's start with the DXY weekly. So the DXY weekly was essentially exactly how we wanted it to play out. We had the CPI, FOMC, and essentially every single day had some sort of news driver. And what we expected was we wanted to see the CPI have a Judas swing early on in the week, with the weekly profile. We want to see the start of the week to the mid of the week have that Judas swing with the CPI event, and then we want to see a mid-week reversal. So if you go to the daily chart, Tuesday marked the day of CPI, followed by this was FOMC, and we see how it was a Wednesday midweek reversal. Now, this is a very interesting position for the currency market for the DXY, Euro, and Pound. If we go to the month, now where are we in the month? Going on from last weekly commentary, we spoke about knowing where you are on the monthly given when you're, early on to the middle of the month. DXY is a level of discount, right? This is redelivered rebalance. There is an imbalance in here. Euro, order block. Pound has the same redelivered rebalance, however, just a premium one. You see how the DXY is at a discount redelivered rebalance and pound is at a premium redelivered rebalance. Now, the question is this. Is a mid-month reversal on your hands? The reason why we're considering these higher time frames, and it's not, unfortunately, the norm is this. People don't consider this level of higher time frame. If you know that you're in for a mid-month reversal, your weekly and your daily profile is going to be so much easier. I don't go past the monthly. Yes, we've looked at the 3 month before, but in terms of looking at where we are for reversal, I only go as far as the monthly. Because if I know that the middle of the month, like here, right, everything is lining up for the rest of the month to reverse the other way. This is the likely opposing end of the range. Just that simple understanding of the anatomy of the candle. Open, create the low, create the high, and then close. Essentially, banking that this is a swing low being created, and it makes sense, right? The time of year offered a retracement inside of a level of discount of inside of an array, and now we find a rejection. This candle, ask yourself this every single time I do these weekly commentaries before I actually record and deliver them. I do this. Where are we right now? Where did we come from, and where are we likely to go? So where are we in the market is, we're essentially here. That's how I say it. So we're at this level of price in the market. Where did we come from? We swept the previous week's low. We went deeper into the redelivered rebalance on the monthly. I like to add in where are we in the terms of the week of the month or the day of the week, depending on if I'm doing this, if it's a Tuesday, because I ask myself this every single day. I ask myself, okay, where are you in terms of time? Well, okay, I'm on a Monday, given a anticipated bearish week, because the weekly profile is important, and that's going to be one of your lessons in chapter 6 as well. Where are we likely to go now? And this is, very simplistic of how I expect where to go now. Use the previous weeks or the closest weekly buy side liquidity pool. For example, if we already took this buy side liquidity pool out here, I'd frame the move onto this buy side liquidity pool, this one, and then work up our way to this one, because that's what the algorithm is trying to reprice to, a level of liquidity, right? If we go to the daily, you see that this is that buy side liquidity pool, and you see how this trend line has been built up, and that's what we wanted. We wanted to see the build up of that trend line. Why? Because you need liquidity when the script flips, right? They'll engineer it. Now, if there is no liquidity, you generate liquidity, right? This is something we've touched on in weekly commentary since perhaps weekly commentary 5. Now, if you look at the COT data, so this is the futures for the dollar. You see how it's steadily increasing, right? From the net short, it's now increasing, going back up to you know, the neutral line. If you go to the currencies, the commingled traders, and we go to Euro USD, you're going to see that it's flattening out. And a lot of you ask, why is it flattening out? The reason why it seems to be flattening out is because the time of year that you're in, large institutions are not going to engage in, well, the commercials, which are the large funds, right? They're not going to engage and entice new risks. So what you're going to see is, you know, the commercial line, you're going to see it flatten out. Why? Because they're not engaging actively in new risk. So it's very normal for this time of year to see it flattening out. However, we're net short still on the euro, right? The graph is still showing net short. Look at who's going the other way. You got both retail, right? You got speculators and, you know, smaller funds, right? They're going the other way. And this is what you want to see, right? Because now these guys essentially shorted to these guys. And where are we in the market? In a deep premium. And these guys are buying in the deep premium and these guys are fading them. And that's how you read the COT data. The best thing is this. You want to see these guys go against them. And then line up the narrative that the chart is showing you. The technicals are pointing towards what? That we are in a premium, right? Who shorts in a premium? Smart money. Who is not aware of the idea of premium discount? Retail. Now these guys are going long inside of a higher time frame premium array, right? And these guys are shorting. This is how you build a narrative. Now, for the week going ahead, so I had to click here. Essentially, there's euro and pound red folders on Monday. You have a Wednesday USD and I think a red USD. Yeah, you have a red USD. So there are a few news drivers scattered around this week coming. Now, if we go to weekly, going off of the previous lesson, I'd favor an open low high close delivery on the weekly over an open high low close. Now, what does that mean? Essentially, I want to see the next candle trade higher. I want to see this buy side liquidity pool tagged, right? Look how many highs have been intact, right? 1, 2, 3 weeks, and no buy side liquidity pool on the weekly has been taken. And there's only been a run on sell side liquidity. I want to see the run on this buy side liquidity pool for the next week. And I'm favoring the low of this week that went to stay intact. Looking at the bonds, if you look at the US 10-year, you see now how it's starting to go sideways. Now, how do I know that it's starting to go sideways? From this low to this high, right? The move back down, we did not take out this low. So what does that mean? If you there's no addition to the external range from a move in the market, essentially it's engineering a consolidation. On the US 30, it's probably a bit more evident. You see how many candles are going side by side by side? That's a consolidation. Now, I want to see a market maker buy model offered on the bond market or the yield market, right? We have this clear trend line built up and we have this as the initial consolidation. I want to see the smart money reversal offset and target buy side liquidity pool 1, 2, and work our way up here, right? That's the end goal. I want to see essentially tag 4.5%, which is something that I've been speaking to you guys about on the Telegram chat. How would I look for the DXY? Well, of course, it's the same thing. You have the highs here and you have this initial consolidation. One thing I wanted to talk to you guys about was Bitcoin. Now, from Snapchat, I expected a move lower for Bitcoin. Now, you saw how essentially it was a power 3 accumulation, right? If you don't know what power 3 is or you're not too familiar, it starts with an accumulation, right? The manipulation is the Judas swing, the fake move to entice retail. On purpose, I am inside of retail chat rooms. This is on purpose. I do this, to gauge their sentiment on the market, specifically crypto ones, right? Now, on this day, what did they say? Crypto is pumping. Let's see 20,000, right? Essentially, that's my fade meter because what I'm seeing is accumulation, manipulation, and if the retail chat rooms are, foaming at the mouth and it fits your narrative, you're probably on side. And then what did you have for the rest of the week? The move down lower. A run on the high and immediately running lower. The intention was never to go higher. The intention was to take them higher for them to go lower. Now, regarding crypto and what you'll see why I'm giving an emphasis to crypto and how it's going to relate to the DXY. There is a lot of FUD going around given the audits of each crypto exchange, Binance being the main one. Now, FTX collapsed, and we spoke about FTX on the week that it collapsed. And we kind of compared it to the Lehman Brothers in the 2007-8 recession. I personally don't have a hope in crypto. I believe there will be something that happens in crypto that offsets something destructive on the DXY, the Bitcoin chart, sorry, that shows, a large repricing to the downside. What is that headline? I don't know, right? It's kind of a gap to fit the narrative for the technical. Now, if crypto, let's say something happens to the exchanges and essentially there is a large repricing to the downside for crypto, where does the money for crypto go back into? That, right, understand the relationship the crypto has in terms of it being a risk asset class to the DXY. Risk, I'll ask you guys watching this. Crypto collapses and sees, let's say it sees, so 16K, let's say it sees a move to 10K, right? Let's say it goes half the price of what it is now. From here, it drops 50%. Do you think the overall narrative is going to be a risk on or risk off narrative? People aren't going to be trusting this asset class no more. Funds will move their money to something that's a safe haven. They're going to essentially be in a full-blown risk off environment. And what does that look for the DXY? That will lead to a greater repricing on the DXY. Now, one thing I was really wound up about and something I really wanted to see was we got very close towards this weekly fair value gap. However, remember the narrative of the monthly. The monthly shows that we were in a level of redelivery rebalance. Now, it's about how you move into areas and away from them. Now, if we start breaking this candle's high and we start seeking buy side liquidity, my eye is going to go towards this level of inefficiency in the market to rebalance that area. We didn't quite get the run into this fair value gap from this candle's high to this candle's low. And something that still puts me off is that idea that these are relatively equal. This candle's high is coming in, this candle's low, sorry, is coming in at 418 and this candle's is 448. So this, right, this has not been swept, this level of sell side liquidity into this imbalance. Now, early on in the week, if I'm going to be invalidated, if I see a run on this week's high, right, the previous week's high. Now, why would I see early on a run on the previous week's high? Because look how close the opening price will be of next week to the high of this candle. If we run above it and we have a displacement, let's say on the 4 hour to the downside, then this is where my bias for the week gets invalidated. And I'll flip it and I'll look for the move back into this weekly fair value gap. But from where we are right now, I would favor a move higher to this level of buy side liquidity. This is how you stay on in line. If you only have a weekly bias and you cannot adapt within the week when you're wrong, you'll probably, miss a lot of day trades. Know when, your bias has been invalidated. If we run the previous week's high and we displace down lower, let's say on a 4 hour, you have a breaker, right? The run on this, let's say the run on this candle's high is in a form of a breaker. You have a high that runs this buy side liquidity and then that low gets run through. That's a run on stops, and that's going to fund a reversal. A reversal to where? Probably the previous week's low and into the here. That's why I say stay out of the Monday. The next lesson I'm making for you guys is called routine, right? And what does routine mean? It means, how essentially I go about from my bias building it, the profiling into day trades. You have to know where you are in the weekly profile. And setting out the Monday gives you that benefit. When you set out the Monday, right, this is what it does. Monday is the beginning of everyone's weekly profile. Given what Monday does, you is very likely to know what the next few days are likely to do. If Monday runs up above this buy side liquidity and you see it rejects and has a market structure shift essentially on the 4 hour, 1 hour, you know that Monday is probably placed in the high of the week. And that Tuesday, Wednesday, Thursday is probably going to go and create the expansion and possibly Friday come back into the range, right? This is how you know when your weekly bias was invalidated and you get in line. It's okay to be wrong. In trading, you'll be wrong. You'll be wrong throughout the day. It's about realigning yourself with the narrative, right? Now, don't just assume that you took a loss and that your bias and narrative is wrong. Sometimes your narrative is right, your execution upon the narrative was wrong. So that's something to consider. Um, for you know, for the S&P, look at the range of this weekly candle from the high to the low. It was a very, very large range. And, I didn't want to see this high of this candle be swept, but we swept this candle, we swept this high again, and now it displaced it down again, right? I'd rather leave this market for now. I just, this move essentially kind of threw me off. If we go down to the daily, if you are trading the S&P, consider this fair value gap and this breaker block, right? Now, I'd favor the move to this sell side liquidity pool and this one over running this high again. But me personally, I don't really trade this market. I, touch on it because there's a few S&P traders in here, but favor this, the move back into here, maybe perhaps early in the week or a rebalance of here. And then if you see the willingness to go down lower, frame the move towards this sell side liquidity pool and work down this range. Of course, I know this is a bullish order block, and a bullish order block in a bearish narrative does not offset just a reversal, just a retracement. The retracement to where? Another level of premium to then reaccumulate and then redistribute sells to this sell side liquidity pool. There's not much to talk about in the weekly commentaries. Perhaps, everything's been touched on in terms of the technicals. There was a trade that we went through together on the Euro USD on the Friday. It was a short position with the red news event at 2:45 UK time. I'm going to make a video after this weekly commentary about that. It's going to be better if it's just focused on that trade setup. If we go through on the weekly commentary, then I speak about what I expect for the week. The focus will shift from, the weekly commentary to the video, and it will be kind of a mess. So just to reiterate before we finish off the weekly commentary, I'm favoring the move to this buy side liquidity pool. Consider this fair value gap from this candle's high to this candle's low. I'm expecting for foreign currencies, right? So foreign currency being pound and euro, for the high of the month to be placed in, and I want to see us, deliver lower for the remainder of this month. We're getting very close to Christmas. The week of Christmas is a very usually, if you go back historically, it's a very small range day because it's a global, holiday, and the volume in the market is just sucked out, right? Now for DXY, of course, if we're expecting foreign currency, the higher the month to be put in, that's because we're expecting this to be the low of the month, right? And I want again see this buy side liquidity pool be hit. It hasn't been a slow December compared to the last 3 years. If you look at the weekly charts in December, the daily charts, the delivery has been pretty clean, right? So any questions, of course, always ask. And until next time, I'll see you guys in the next one.